All right, let's talk about something that's on every crypto investor's mind. We're diving into a really clever strategy for navigating the absolutely wild crypto market. It's all about how you can protect your profits and still be ready to jump on that next big wave.
So, picture this. You're in the green. Your portfolio's looking good, maybe even great. It's an amazing feeling, right? But then that big question hits you. How do I actually protect these gains before the market decides to, take them all back?
And that brings us to the crypto roller coaster, because that's exactly what it is. I mean, prices can just shoot for the moon in a matter of hours, which is incredible, but they can also fall off a cliff just as fast. That's the game we're in. Huge opportunities, but also huge risk.
And this really gets to the heart of the investor's dilemma. On one side, you've got your volatile assets. Think Bitcoin, Ethereum, where the big money is made, but your profits are never, ever truly safe. And on the other side, you need something stable, something that can shield your money from those insane market swings.
So how do you get that stability without just cashing out and leaving the game completely? Well, there's a kind of financial safe harbor designed for exactly this, and they're called stablecoins.
So what exactly is a stablecoin? The idea is actually pretty simple. It's a type of crypto that's built to hold a steady value. It does this by pegging its price to a real-world asset, usually the US dollar. So the goal is that one stablecoin is always worth $1. Simple as that. And you've definitely seen these names floating around, the big players in the space. The ones you hear about all the time are Tether, or USDT, USD Coin, USDC, and Binance USD, or BUSD. For a lot of investors, these are the go-to choices.
But here's the thing that's really interesting. Using stablecoins isn't just about playing defense. Nope, it's actually a really smart, proactive strategy that can give you a serious edge in the market.
So how does this all work in the real world? It's basically a 4-step playbook. Step 1, your coin has a great run, so you sell and capture those profits. Step 2, you immediately convert that cash into a stablecoin like USDC. Step 3, you just wait. Your capital is now shielded while the market does its crazy thing. And step 4, when you see the next big opportunity, you redeploy that capital and buy back in.
Now, one of the biggest, and I mean biggest advantages here is speed. Just look at this. A normal bank transfer can take 1 to 3 business days to clear. In the crypto world, that's an eternity. A stablecoin transfer? We're talking minutes. That kind of agility is a total game changer. It means you can react pretty much in real time.
And get this, it gets even smarter. While your money is sitting there, safe in stablecoins, it doesn't just have to, sit there. With DeFi, or decentralized finance, you can often put those stablecoins to work earning you interest, so you're earning while you wait for the next trade. Your capital is never sitting idle. So let's just recap the strategic edge this gives you. You lock in your profits, but you never have to leave the crypto ecosystem. You preserve your capital, so you're ready for the next move. You're actively reducing the overall risk in your portfolio, and you keep that agility to pounce on opportunities the second they appear.
Okay, it all sounds pretty great, I know. But like with anything in finance, there are risks. You're not a smart investor unless you understand the potential downsides. So let's just pump the brakes for a second and talk about what you need to be careful of. These are the key things you've got to watch. First, how stable and reliable is the company that actually issues the coin? Second, what are governments saying? The regulations are always changing. Third, is there enough liquidity? You need to know you can convert a large amount easily if you have to. And finally, you really should understand how they keep that peg to the dollar. These are absolutely critical questions.
So let's bring it all home. When you put everything together, the profit protection, the incredible speed, the agility, and being aware of the risks, it becomes pretty clear. This isn't just some gimmick. It really is the smart investor's play.
And honestly, this quote from our source material just nails it. It says, "It's a way to lock in profits, manage risk, and maintain flexibility, all without stepping out of the digital asset ecosystem." That's it. That's the whole strategy in one sentence.
So I'll leave you with one last question to think about. Take a look at your own portfolio, your own strategy. Is it built to actually manage risk and seize opportunity? Or is it just built on hope? Something to think about. Thanks for tuning in.